Hi, folks. What do you call it when markets break records, volatility drops, and even Dr. Ed Yardeni says the biggest risk right now isn't a crash, but a meltdown? That's not hype. That's this week's reality. In today's breakdown, I'll show you why Yardeni is calling this the return of meltdown mode, which sectors are quietly leading this charge, and what July's biggest wildcard, tariffs, could mean for your portfolio. Stick around because later in the video, I'll give you Yardeni's bold forecast for where the S&P 500 is headed next and why a quiet metric you're probably ignoring might be the real key to what comes next. Despite political chaos, markets roared higher. Yardeni says the bull market that began in October 2022 is alive and well. And we're now entering what he calls the speculative melt-up territory. S&P 500 index is up 1.3% last week. The NASDAQ hit 20,369, and the Dow closed within 0.5% of its record. Even small caps joined the party, though not a new high. Russell 2000 climbed 2.74%. The volatility index, the VIX, fell again, now at 16.38. That's very calm. Why? Markets think Trump's looming tariff deadline is more bark than bite. Well, they have been so far. They haven't been red lines, more negotiating tactics to get people to the table. S&P 500 companies bought back $293 billion worth in the first quarter alone. That's a record. Apple, Meta, Alphabet, and NVIDIA led the charge with $73 billion combined. Earnings revisions have stopped falling. 70% of companies are reporting positive forward EPS momentum. Dr. Ed says second quarter results will likely beat expectations again because of this positive momentum now. Since this bull market run began, tech is up 140%, communications is up 134%, industrial 73%, financial 72%. Yardeni got all those right, though he missed on energy. And so did we. Our worst performing stocks this year so far have been energy. Don't get too comfortable. July 9th is the tariff deadline. Vietnam secured a 20% cap. Japan, EU, China, well, they're still in play. 70% of global restructuring pros expect rising distress. What's next? Well, bank earnings kick off this week, big tech later this month, and Yardeni's year-end target, S&P 500, 6,500. Long-term, he still sees 10,000 by 2030. Buybacks, stabilizing earnings, easing rhetoric. That's the foundation for this melt-up, but stay sharp. Dr. Ed reminds us 4 months ago, it was a fear of collapse. Now it's fear of missing out. All right, folks, before you go, make sure you check out this video and also make sure you check out the videos that are coming out in the next 1, 2, 3 days, because there's one thing I left out here, and that's the big, beautiful bill and how that affects investors. Please hit the like button, the subscribe button, and then hit that bell 2 times so you don't miss any notifications about when we drop all these great videos.